Hi and welcome to ECCB Connects. Are you interested in investing? The regional government securities market is a viable option to grow your wealth. This week, Laurent Hadley, Manager Treasury and Investment and Licensed Principal at the Bank of St. Vincent and the Grenadines, takes us through the steps of investing on the RGSM. Stay with us. We'll continue in a moment.
Celebrating ECCB at 40.
Did you know that the EC dollar has been pegged to the US dollar at a fixed rate of EC $2.70 to US $1 since July 7, 1976? Now you know. Celebrating ECCB at 40.
Laurent, welcome to ECCB Connects.
Thank you. Thank you for having me. It's a pleasure to be here. I look forward to having an interesting discussion on investing on the RGSM.
Laurent, one of the first steps an individual needs to take when that individual is thinking about investing and investing on the regional government securities market is to find a broker. This is an individual who is licensed to conduct this type of business. An individual wants to invest. How does he or she get in touch with a broker?
Well, the list of brokers can be found on the ECC's website. There are brokers in most of the territories, barring two, I believe, but that still doesn't restrict someone in those territories from investing. You can still reach out to any of the brokers in any of the territories. The names of the licensed individuals and their contact information could also be found on the website of the ECCC. This sort of company would be vetted by the regulatory authority, which in our case would be the ECSRC, the commission, and they would be bound to certain reporting requirements in order to protect investors.
If an individual wants to invest on the RGSM, we know we have to start with some documentation. What are the required documents to start the process?
So once you identified a broker, BOSVG being one such broker, you need to present the relevant documentation in order to establish a brokerage account. These documents include two pieces of identification, so a national ID, passport, or a driver's license, some form of proof of address, so a utility bill, and some proof of income, so a job letter. For persons who reside outside of the ECCU, you may also require 6 months bank statement, and you may also be required to complete the factor documentation or the CRS, depending on which territory you are from.
An individual has identified a broker to conduct investment on his or her behalf. The individual has identified the relevant documents. What are the next steps?
Once you have opened the account, the next thing we need to do as a broker is to understand your investment objectives or your goals. And what this really entails is why the reason you are investing. So are you investing for short-term trading, or do you have a long-term goal, or do you have some cash flow needs? As a broker, we need to understand this in order to make the right investment decision for you. Additionally, we need to understand your risk tolerance. So how much can you invest and how long can you invest for? So these are all things we have to take into consideration before we move ahead with the process of investing.
Also, how much you are willing to lose, because investment, you win some, you lose some.
Exactly, just like anything else, there's risk involved. Like you said, you could win some, you could lose some, values go up, values go down. But again, our role as the broker is to understand your risk tolerance. Of course, we have information based on research, and we could advise you how to make calculated decisions based on the information you would have provided us.
Two of the key instruments that are offered on the RGSM are the Treasury bill and bonds. Explain these two instruments, please.
The Treasury bills and bonds, these really represent government debt. So you're essentially lending money to the government. Treasury bills, on the one hand, are the shorter term instruments, so they range from 3 months to a year. Bonds, on the other hand, they could go up to 15 years. In terms of the dynamics of the treasury bills, those are issued at a discount. So let's say you want to invest $10,000 in a treasury bill, you would not invest $10,000 upfront. You would invest an amount less than 10,000. That is, it is discounted, and at the end, you would get your full maturity. So some persons usually say that you get the interest upfront, given the way that it's done. You invest at a discount, so it's like you're getting your interest upfront. Bonds, on the other hand, are issued at par as opposed to a discount. So if you want to invest 10,000, you invest 10,000 in addition to the fees, and then you get your interest semi-annually based on the rate of the instrument and over the life. In addition, bonds could have amortizing payment structure or a bullet structure. The amortizing, it pays you back equal installments of the principal over the life of the bond, while the bullet instrument pays you back everything at the end. So again, coming back to my point about understanding your risk tolerance, whether or not you decide to go with amortizing or a bullet payment depends again on your risk tolerance.
And you mentioned the maturity. So for the treasury bill will be considered appropriate for somebody who wants short-term investment?
Yes, again, for somebody who is risk averse, they don't want to take too much risk. A treasury bill would be better suited to them. Or let's say they have some short-term cash flow needs. They might need to make a payment 3 or 6 months down the road. A treasury bill would be a sort of short-stop mechanism for them to place that funds until they're ready to make that payment.
And receive their returns in a pretty short time.
Correct, correct.
With the regional government securities market, there's a minimum of $5,000 for any individual who wants to invest. Now let's go through take us through the process. Let's see what the returns will look like. So let's say I have $10,000 that I want to invest in a treasury bill. What would my returns look like? Let's say I invest in a 90-day treasury bill.
Okay, so with $10,000, let's say at 3%, for 90 days, you would, upfront, you would invest $9,925. And after the 3 months, you would get back your $10,000. So that's income of $75 over this 3-month period. You multiply that by 4, you would make $300 over the life of the instrument.
What fees are associated with these instruments?
Well, for the broker, there's the commission. Most brokers, this is about 0.2%. That's most brokers within the region are about 0.2%. Or some minimum amount. And then there is the ECCB fees, which is 0.03% for treasury bills, or a minimum of $12, and 0.075% for bonds, or the same minimum of $12.
These fees are taken into consideration. That calculation you just did, these fees are already deducted, or they have to be deducted?
Yes, well, in my calculation, these fees were not taken into consideration. And of course, as an investor, you must take these fees into consideration because ultimately they affect your returns. But as I pointed out, the fees are minimal. And as brokers, we would guide you with this as well.
Laurent, this same $10,000, let's say I have I want to go into longer term investments. So instead of the treasury bill, the 90-day, I want to invest for 10 years because 10 years down the road, I have need for this money. I have a project I want to undertake. I invest in my $10,000 in a 10-year bond. What will my returns look like?
So let's say $10,000 at 7%. This would mean you'd be earning an annual rate of $700. But as I mentioned, earlier, bonds pay back interest semi-annually. So if you divide the 700 by 2, you'd be getting $350 every 6 months.
You use 7%. Is that the benchmark?
Yeah, so based on the yield curve within the region, 7 to 7.5% for 10 years is what an investor would likely get for an instrument of that tenor.
Laurent, you have about 10 years working in this field as a broker and investments. What are some of the common questions you have had from potential investors?
Well, one of the common questions is, could I lose my money? And as I mentioned earlier, with any investment, there's the risk, particularly with bonds and treasury bills. More so bonds than treasury bills because they are short-term, and the longer the tenor, the greater the risk. So there's the potential for credit risk, which is the possibility that the borrower may not be able to repay. But generally, my response to that is that within the context of a country, the government is the safest investment that you could get. Another common question that I get is, should I wish to sell this security during the life of the instrument? Can I do so? And absolutely, there is a secondary market in which you could trade these securities. Again, you come to your broker and he will put them up on the market for you and help you to liquidate the instrument, so you could get back your money even if you need it before it matures.
As you mentioned, with all investments, there is risk. What would you say is the common risk when investing on the regional government securities market?
There are several risks with investing, including market risk, interest rate risk, credit risk, but the one that investors are most concerned about, as I mentioned, is credit risk and whether or not they could lose their money over the life of the investment. And with any investment, there's the risk that you could lose, there's the risk that the price could go up or down. But like I mentioned, with government securities within the context of a country, it's the safest that you could bet. So that provides some guarantee for investors.
Laurent, as we wrap up, we continue to encourage our citizens to invest. What tips or encouragement do you have to offer the people of the Eastern Caribbean Currency Union when it comes to investing on the regional government securities market?
What I have found in my own experience is that some of the apprehension that comes from investing or towards investing is a lack of understanding. And as a potential investor, I would encourage you to reach out to one of the brokers in the union and ask as much questions as possible to get as comfortable as you can before you make that decision. And I would also like to take the opportunity to commend you and by extension the central bank for programs like this, because what we realize as participants in the market is that a lack of information is what is restricting participation in the market. And once we could get that knowledge out there and get persons comfortable, then we could drive a more dynamic capital market that would benefit the region.
Laurent, thank you very much for speaking with us on ECCB Connects.
Thank you for having me.
Celebrating ECCB at 40.
Did you know that the vision of the ECCB is to be a model institution delivering exceptional service and influential policy advice to support the development of a thriving currency union? Now you know. Celebrating ECCB at 40.
We've come to the end of this week's episode of ECCB Connects. In this program, we explored the steps for investing on the regional government securities market. First, you need to engage the service of a licensed broker. The required documents are national identification, proof of income, and proof of address. You will discuss your investment objectives, goals, and cash flow needs with your broker. The minimum amount to invest on the regional government securities market is $5,000. Thanks for watching. We invite you to join us next week when we'll be back with another program to share with you who we are, what we do, and how we serve you.